Hi, Jonathan York, Quebec Financial Partners, looking at investment markets. US stock indices continues to sort of trade up and setting record highs. Now that's on the back of several factors. Obviously, the US economy is still pushing on a pretty good rate, but also as well, obviously, with Trump and getting back into the White House, the feeling is that he will be sort of business friendly, looking at tax cuts and reducing that corporation tax for US companies. Now, while those policies are certainly inflationary and potentially, certainly tariffs could do a lot for the US inflation numbers, potentially, obviously, the tax cuts have an implication for the deficit as well. But what is quite interesting is US rates have come back down from, the 10-year was around sort of 445, that's back around 420, 2 years back around 415. And certainly the markets have taken a lot of sort of comfort from Trump's nomination for the Treasury Secretary of Scott Bessent. Now, obviously, you still have to get these nominations confirmed, but if he is confirmed, and at present he doesn't see any reason why he won't be, that seems to have calmed the markets and seems to be a pretty safe pair of hands and a level head for the US economy. It will be interesting, though, on the potential tariffs that Trump is looking at imposing on Mexico and Canada. Because, as discussed here before, they make up a considerable amount of the US trade. But also, as well, you've still got the US MCA in place. So is this just a tactic from Trump to try and renegotiate that trade deal? Now, there has been a bit of to and fro between sort of Trump and Biden. Biden has obviously given a pardon to his son, which has caused a bit of angst. And, Trump has sort of raised the issues about pardoning the January the 6th rioters. Also, as well, a little bit of concern is that the ceasefire between Israel and Lebanon appears to be pretty fractious at present. Both sides have potentially sort of fired off sort of warning shots and claimed that each other is attacking and breaking the ceasefire. Probably the main issue is you've got extremists on both sides who really didn't want a ceasefire. They wanted to continue the aggression. Now, oil is just a tad under $70, currently 69.80 and change. Now, in the UK, as we head into Christmas, really a mass clear up after the recent storms, and it's just going to be very interesting to see what sort of impact that has on the UK economy. Because certainly that was pretty sluggish at best. Now, in the EU, a little bit of political unrest in France. The PM there, Barnier, has passed a contested budget under special constitutional powers. And potentially the first sort of test for the European Union, really since the UK left under Brexit. Now, in Australia, stock market trades higher as well, setting record highs, and that's all without a rate cut. Now, potentially with the RBA looking at cutting rates next year, it'll just be interesting to see how this does play out. Now, here in New Zealand, after the 50 basis point cut, when many thought we should have seen 75 because the economy is really pretty sluggish, and we've got quite a while until the next meeting. Next meeting is until February the 19th, 2025. But certainly by then we would have seen the next round of inflation data, and that's expected to be lower still. So given that and the sort of comments from the Reserve Bank as well, you'd expect a further rate cut at that February meeting. Potentially that's 50 basis points. Which, looking at projections where the OCR is sort of heading to, that still leaves around 75 basis points to be cut over the next sort of 3 to 4 months after the February meeting. Interesting as well, in 2025 we've got about 13 billion of government bonds that roll off. So those have to be refinanced in 2025. But there is a little bit of good news out there. Latest ANZ consumer confidence survey was up again, and that's probably just sort of feeding off the back of the sort of rate cuts and potentially further rate cuts down the road in 2025. But obviously that survey is coming off a pretty low base, and certainly as well, if you look at the economy, it is still pretty sluggish out there, and it's just going to take time for these interest rate cuts to really impact the economy. Especially with many mortgages yet to be reset. But they will be reset over the next sort of 3 to 6 months at substantially lower rates than they're currently on. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.